Hi, and thank you for taking this course. In this short course, you will be provided with knowledge, a framework, tools, and useful tricks to trade Forex on market news. The tools include an optional robot download, which is an expert advisor. First of all, let us answer the question, why do we need to trade the news in the first place? Why not simply pick up a trading system from the many already existing ones? Well, all current trading systems are based on technical analysis, which describes past performance, and future performance is not guaranteed. You may already know this famous disclaimer from your Forex broker, stating that no trading system has the power to predict future price action in the short, medium, or long term. Most systems cannot even predict tomorrow's market performance. But do we really need to become oracles? Let us consider quantum mechanics, a famous and deeply paradoxical theory that puzzled even Albert Einstein.
The foundation of quantum mechanics is explained by the following experiment. Suppose we have a wall with two holes. Suppose we shoot marbles at it, one marble at a time. Behind the wall, we have a cloth. Each time a marble hits the cloth, we mark where it landed. As marbles hit the cloth in the same spot more than once, we mark the red mark darker. Some marbles make it through the holes by bouncing off at an angle. But most marbles that make it through the holes continue in a straight line. After a while, there will be many red marks on the cloth. The darkest red marks will be directly behind the two holes. Now suppose the two holes are very narrow. Suppose the marble is very small. Now the result is very different. A striped pattern is produced. The marbles never hit the cloth in the areas between the stripes. All particles in the universe produce this striped pattern, provided that both they and the holes are small enough. No matter how many times we repeat this experiment, and no matter what type of object we use to replace the marbles, the result is always the same. Only one known phenomena can explain this result. Waves. When a wave passes through a hole, it spreads out on the other side. If there are two holes, two waves are produced. When you have two waves, they interact with one another. In some areas they strengthen each other, and in other areas they cancel each other out. This creates a striped pattern. This is the exact same pattern that we saw before. This means that all objects really behave like waves.
This theory is about the density of probability. Imagine the following thought experiment, illustrated in Figure 1. We fire a single quantum particle, let us say a photon, a basic unit of any light, from an imaginary source into a barrier with two slots in it. On the wall behind the barrier, we get a light image showing vertical stripes. The middle stripe will be the most focused, while those on the sides are more blurred. This means more photons hit the middle part of the wall. If we define the left side of the wall as 0 and the right side as 100, we get a segment from 0 to 100, with the most focused stripe appearing around the 50 mark. This is called the wave interference pattern, where each stripe corresponds to one interfered wave. What is the chance that a photon hits the middle part of the wall? According to quantum mechanics in this thought experiment, as the number of photons fired approaches infinity, this probability approaches 50%. Quantum mechanics therefore stipulates that the best ratio of successful trades we can achieve will never exceed 50% in the long run. Including all spreads and brokerage fees, a trader will never be profitable in a long-term perspective. It is important to note that a quantum particle has the best chance of being at a particular point in space at the moment it is observed. In trading terms, this means that the current price is the most probable price and cannot be predicted in hindsight. This is especially true when we look at the most successful investor of our time, Warren Buffett. He was losing money in the 1960s and 1970s when he heavily invested in the textile industry. With the rise of China's economy, he was forced to sell all his textile holdings. On the contrary, when he began investing in banks and insurance companies, his wealth grew in geometric progression. He is not exposed to significant risk, since banking and insurance businesses are based on fixed income streams such as fees, premiums, loans, and government bond interest. He does not rely on technical analysis the way most traders do. Fortunately, there is a solution to this puzzle. If, according to quantum mechanics, short and long positions have the same odds of success, let's open both at the same time. By this simple action, we have already achieved the impossible 50% chance of success. Congratulations! To improve those odds further and offset spreads and brokerage fees, we should enter trades during the most volatile periods, when major news is being released. Trading is ultimately about levels and timing. We do not have control over price levels, but we do have control over when we enter a position. That is good news. We have at least some control amid the market's unpredictability. More good news. You do not need deep knowledge of technical analysis. Analyzing multiple charts every day is time-consuming. You need not concern yourself with current or future price levels. You do not need to be a programmer to operate the system, nor do you need to invest in one. You will only be in a position during news releases, therefore for a short period of time, and your risks are limited. The robot will take full control of managing profits and stopping losses. That is exactly how major financial institutions trade these days, with a defined set of algorithms. In the chapters ahead, you will have all the tools for this race against the odds. Good luck and more green pips to you.